thanks, Sahara, for hosting this event. It's really a rare opportunity, I think, for so many investors, so many leading projects that are, reshaping the industry or pushing the industry forward in the crypto AI space. So just maybe we'll take a couple of minutes to do a quick intro. Jack, shall we start from you?
Yes, thank you. Great to be here. I'm Jake Brookman. I'm the founder and CEO of CoinFund. Backgrounds in technology, studied math and computer science. And then CoinFund has been a blockchain-focused investor since 2015. And I focus on early-stage investing in mostly infrastructure and deep tech of blockchain decentralization technology, with a more recent interest in the intersection of AI and Web3. So excited to be here. Thank you.
I'm Sam Campbell. I'm an investor at Samsung Next. We typically do early stage across many different sectors, but a big focus for us is AI and crypto. We've been investing in the space since 2016, and really just a thesis of how do we bring the power of decentralization to 1 billion people. Ideally, we think it'll be through crypto and AI.
Hi guys, I'm Sven. I am a researcher at Polychain Capital. We've been investing in crypto projects and blockchain projects since 2016. Personally, I have a degree in mathematics, and I ended up going down the route of machine learning. So I spent a couple years in the space as a machine learning engineer, and then moved on to Polychain, where I'm now an investor and a researcher. So spend a lot of my time in this convergence of crypto and AI.
Thank you, thank you. Lastly, for me, I'm Emma. I manage LongHash Ventures. We're a crypto native fund since 2018. We also have Accelerator, so definitely have been super interested in the crypto AI space. I guess maybe we'll just open things up. I know it's a super interesting area. A lot of funds have written thesis, which from memory, I think CoinFund has published thesis, Polychain as well. The first question will be, how do you look at the DAI stack, and what is your AI thesis around it? Whoever wants to jump in and take the question.
Yeah, I'm happy to start. I think looking at AI as a thesis as a whole is, I think, the best place to start. And AI itself is still very nascent as an industry. I think we maybe overlook how new AI is and how new it's found success. It's only really been in the last 5 years. And it still has a long way to go, and it's still developing quite a lot. So also I look at AI as kind of just now generally, as almost like a top layer. It has the ability to be across multiple verticals and live on top of whatever infrastructure and architecture there is out there. So we see AI being used on traditional banking, in the traditional banking world, because it can just be applied on top. I think crypto and blockchain specifically can also find themselves within and across different verticals, but they sit at a different layer in the stack. They're more at the infrastructure level and the foundation level. And I think AI, in order to actually grow past the level where it is right now and to reach its further potential, that in order for it to get there, it needs some new level of infrastructure. And this infrastructure is now being provided by a lot of what is happening at the convergence of crypto and AI. And a good example is when we look at what is necessary for AI to really push the limits is the access to data. And a lot of the public data has been already, some would say, all used up already in the training of a lot of these data systems. And now we've hit this data wall. And when we look at the intersection of the two technology, we see companies like Grass and Varna who are actually innovating at this layer, but from the infrastructure level to now actually accelerate what AI can be going forward. So I think this whole stack of crypto and AI and DAI is still in its infancy, and there are many layers and different aspects that will require a lot of development, and in that sense, a lot of opportunity.
Sounds like you guys are much deeper into the data layer. I think when you were talking through the thesis there, definitely super, super interesting. I think, Sam, you're going to jump in.
Yeah, I'm not a researcher, so mine's a little less eloquent, but we see these AI and crypto both as kind of horizontal technologies that can be applied to banking, they can be applied to money, media, and other things like that. And similar to AI is that you can have verticals that it's applicable for. And so the convergence of these two we see as kind of a unique opportunity is like not every company needs AI, not every company needs to be decentralized, but there's a unique problem set where these two technologies can come together, and that's where we kind of start our exploration into the decentralized AI space.
If the assumption is that AI is, one of the most important technologies that humanity has ever developed or will ever develop, then the way that we are developing it is in a very, traditional, centralized, and proprietary model. And there's a pipeline that creates AI. It is people, it's data, it's compute, it's training, inference, productization. And that pipeline today is owned by a very small handful of essentially big technology companies. Most of them are located on the West Coast of the United States. And as such, I think folks have, for many different reasons, an interest in the openness and transparency of that pipeline, both because of the performance of the models, because problems like safety should be worked on by, thousands or tens of thousands of people, not just hundreds of people at OpenAI, because AI is not evenly distributed across the world, and it maybe should be, because to the extent that we can't solve the safety problem, we should actually open up all the AI and let a power balance take place so that it's safe. And our thesis at CoinFund, very simply, is that Web3 primitives are the best primitives, the best tools to essentially enable, the openness of that pipeline. What does that mean? It means perhaps aggregating compute and allowing people to crowdfund or at least use these resources in a public way. It is using decentralized networks to deliver functionalities like training, like inference, using crypto incentives to make processes like human supply chains for data labeling more efficient, more effective, opening up that pipeline. And I think it's very early in that process, and there's some key, very difficult problems to solve in order to enable those processes to happen in a centralized way. But as one of my portfolio company founders loves to say, just a reminder, we can solve hard problems.
I think you guys covered quite a few areas of potential disruption, right, where AI can bring to crypto. Is there any area that you're paying particularly more attention to that's close to your heart, or you think that will capture the most kind of upside right now?
For me personally, that is a thesis on decentralized training. The consensus up until very, very recently has largely been that decentralized training is not a problem worth working on, is not an interesting problem, is too hard, is impossible, is too slow. Google already won, NVIDIA already has all the compute, et cetera, et cetera. I think that consensus is now changing because if we take a step back and we say, if we wanted to take a certain topology of hardware, so we take for example, a decentralized network of commodity hardware, let's say, with very slow interconnects, what can we actually do to train a model and maybe even a large competitive model on such a network? And the answer turns out to be probably 90 to 95% of the research that would enable at least some results in that area has been done. And what needs to happen is someone needs to put that into production and learn a lot about what the real bottlenecks are. We've also seen recently the launch of OpenAI's O1 model, which represents a new dimension upon which we can scale, let's say, intelligence of these models. And that's kind of the search dimension. The profile of compute needed for that is a lot more easily obtainable than the kind of compute and setups that are needed for training. And so there's also a view that, like, hey, if we can scale intelligence on, on the inference dimension versus the training dimension, we can perhaps get to intelligence even sooner than we thought. So that's also bullish for decentralized networks. It makes their job easier to compete.
So decentralized training. Sam, you want to jump in there?
Yeah, one area we look at from the Samsung perspective is there's 1 billion mobile phones that are produced by Samsung. And one way we view decentralization is through on-device models. And so if you're able to run locally and run the inference locally on your device, you can own it, and it is a form of the decentralization. I might take the other side of the bet on the, maybe Jake and I should chat after about the training side of things, but we do focus more on the inference and what can you give to the user so they can run it on device and really provide this alternative to the West Coast technology companies.
Yeah, I think I might have to agree with both of those. I think they both fall into this category of within the AI space of limitations, and it's actually a limitation long term of where training can go. There are going to be limitations on how big these data centers can go, how many GPUs can actually be in there, and actually the real estate and energy limitations around the areas where you can create these data centers. So in terms of looking at it in that perspective long term, there is actually a need to move to some sort of distributed training, some sort of decentralized training, and that's where, like News Research with the Distrolo model, they're now innovating at basically the bleeding edge of this category to try and create solutions where you can actually get this decentralized training, not actually training in a federated learning way, but actually just a training model that at each iteration allows for less bandwidth to be spread between the GPUs themselves. This is also very interesting when it comes to the inference side, and touching on the new O1 model by OpenAI, it's also this idea that the GPU itself can be, it's like a change in where the GPU intensity and is going to be, basically is where it's going to shift is from the training side to the inference side, because there's going to be a lot more GPU needed to run the inference side, especially when they're doing these multiple steps, chain of thought type of reasoning. And so that's also, looking very heavily into the inference space as well. But then I think this all comes together into this idea of actually having personalized AI. And this personalized AI is, the only way you can do this. I think we've all looked at inference networks that focus on verifiability, inference networks that focus on, maintaining privacy. But what actually solves both of those is running it locally. And this then leads itself into this space of having kind of clustered or edge computing. And I guess there are now a few companies building at the forefront of actual clustered edge computing, so you can have run your own cluster. And I think that is something that is super exciting and starts solving a lot of the problems that were previously the biggest challenges within the space.
That's super interesting. I think Delphi has recently published extensive reports about the DAI stack as well, right? And definitely, I think, kind of overlaps with a lot of points the panelists have mentioned. And I personally think for us, data layer is super interesting in leveraging crypto tokenomics incentives to leverage and crowdsource for data that's not really readily available there. I guess next question would be a spicier question is, do you guys think serious AI talents have joined crypto now, or are they still kind of remain within Web 2, right? Because there's still so much hype, they're getting massive valuations, and a lot of people building that space, right? Yeah.
Well, I think there's definitely a social and cultural dimension to this intersection, because there's literally sort of a movement of people who are building AI, and they're in Web 2 pretty squarely, and they have certain sets of values, like they value pedigree and what university you went to, and then there's a Web 3 AI kind of movement as well, and this movement tends to contain more like Web3 native people who place more of a value on open source and less value on what university you went to and so on. And like probably one of the most valuable things that we can do in decentralized AI is to converge those two sets of people. And we see that process sort of happening in real time. Like it's now very well known, right, that Ilya, the CEO of Near, is one of the authors on the Attention is All You Need paper, which is the seminal paper that created transformers. Imad used to be a founder in crypto and is now working on, and then worked on Stability AI. And when we think about this at CoinFund, my mental model is, there's certain really difficult problems here, and you need someone with AI experience, maybe an AI PhD, someone very deep on the details and the technicals of these fields to start to solve them. But what we want to do is we want to give them Web3 tools. We want to show that by adding Web3 primitives to these projects, we can build products and services that are in fact competitive with Web2 versions, because whatever dimension they're adding, openness, transparency, verifiability, maybe building networks that are public goods, etc. We want to show that those products are going to be competitive with the Web2 ways of doing things. And if we can't show that, then unfortunately, it's not going to work out. But that's how we tend to think about it.
I will say a year ago, none of the AI people they would laugh at you if you said crypto. I think there was some larger developments. I think Sam Altman getting kicked out of OpenAI and coming back. I think the community is naturally arriving at crypto and seeing that this is a great way that you can have open source models are becoming more and more powerful. And I think the community is arriving at crypto as kind of the only option to battle kind of decentralized power.
Yeah, I agree with that. It is quite a nuanced area, because at the same time, bringing in a lot of very strong AI developers is going to be very tricky. And it's more of an incentivization problem. That's why I like to look at it, again, from maybe the limitation side. So I think a lot of the crypto and AI companies, the DII companies, are building for these limitations, and only by unlocking very specific use cases within the AI landscape will they actually start incentivizing a lot of the AI developers to actually come over. So looking at companies that are building for, basically building for the developers of AI, because that's where a large majority of the world's developers are. And building to solve their problems, and building to make open source developers get some sort of financialization back from their contributions. There are many different aspects, and I think ultimately it will naturally tend to a lot of AI developers coming over, and a lot of AI researchers. I think trying to directly poach AI researchers to build a competitor to what is already out in the AI landscape is not going to be the way to do it, but rather showing them the benefits that the ethos of what blockchains are, when it's maintaining privacy, permissionless access, censorship resistance, and transparent and governable systems. Bringing all these to light through legitimate projects will just, it will tend towards these two being, instead of just crypto or AI, it's just going to be, this is now one full stack.
Yeah, there was a podcast by A16Z, Ali Yahya, and I think Dan Bonnet, right? Exactly talking about this point, that blockchain technology is actually essential to balance out the centralizing force of AI, because AI benefits from big data, big model, right? Big GPU, everything has to be centralized, right? But the unique set of features like that blockchain technology has to offer actually really balance that out, right? And provide a level playing ground for different use cases, or for the small guys out there. So I think that kind of summarizes very well of what the panelists were sharing on this point. And I think in the remaining time, what's dear to investors' hearts is, you know, what are the funding dynamics out there, right? We all know AI, you know, projects are getting massive valuations, right? Every couple of months, there's like a new heights in terms of valuation. And I think some of that have translated into Web3 crypto projects valuations as well. Even though the, you know, as a Web3 investor, there's like so many different pockets of verticals you have to cover, right? And there's like different flavor of the day. But Web3 AI has remained, I think, a pretty hot topic, right? A lot of funds are willing to deploy into that space. So just kind of want to hear from the panelists here today, how do you see this funding market shaping up? What are your observations in terms of the dynamics out there?
Yeah, happy to take this one first. So what's interesting about AI in comparison to other software out there is that it also has a lot of emphasis on the infrastructure side of it. So the GPU, if you need to set up your own data center, if you want to have private, you know, owned models running on your own software, so to keep it private, then there's this large capital expenditure. And the same thing with when you want to train new models or basically any new startup that wants to come in the space and really make a wave, a lot of them have to have this really high capital expenditure off the bat. And because of that, they actually do need a lot of that initial capital, which has sent the valuations probably a bit higher than what we expect. Or actually exactly where we expect because of how much they've modeled out, you know, the expenses that they need to account for. There is obviously this like narrative and wave of AI companies being the hype, and I think a lot of the ones that like pure AI that have been invested in won't survive probably after 5 years, but that is the case with any new industry. I think there may have been some leakage towards, you know, the crypto and AI companies in terms of valuations and prices, because it is two of the most thought-provoking and interesting technologies of the last 10 years. And they're converging, and I think it is, these valuations, you know, it's hard to always judge if they are too high until they truly find success or do fail. I think right now, the market could be seen as a bit up and down, and within the space, crypto and AI is getting a lot of investments, I think similarly to architecture and infrastructure, but they play into each other.
Yeah, I will say, maybe this is controversial, but it is quite frothy out there. I think we're seeing a lot of people, a lot of founders see a headline number and think that they deserve that or better or higher. And so I think it's been a very noisy space. Really more recently, I think we've seen a lot of the crypto projects trying to pivot into the crypto AI, more so than the AI folks coming into the decentralized AI thesis. But it has, to your point, these are expensive projects. These are, you're burning real energy and buying real GPUs. And so you do need quite a bit of capital, but it is hard to kind of filter through some of the noise, given how much excitement there is.
Time will tell, I guess.
Yeah, I would say, you know, one of our core focuses to, you know, as an investment firm is to create like a great return for our LPs, and sort of the formula, the aspirational formula for that is to be contrarian, early, and right. And companies in that category tend to not be as overvaluated as other things. I would also say that like the way we select founders at CoinFund and have always selected founders at CoinFund across every vertical is long-term orientation. Like we have been here for about 10 years. We plan to be here for another 10 years at least. And you know, we want our portfolio companies to be building products where we give them like a 5 to 10 year horizon to really, you know, build something really big and really effective, really fundamentally valuable. And so there's a lot of valuation discipline that we practice and that our founders practice because they think it's the best way to build what they're building. So that's what we do.
I'll say the other point is that in traditional venture, there's usually maybe 10 companies a year that really matter. And so the price you pay to get into those 10 companies, you'd like a lower price, but we underwrite to 100x, but there's kind of much, much larger returns out there. And so it's really about being in the best companies. Hopefully they are contrarian. Usually they are, to be able to underwrite to that, but it's really about finding the best companies regardless of the price.
Absolutely. I think like as human nature, we tend to overestimate things in the short term and underestimate things in the long run, right? And also, I think a lot of the expenditure, to Luke's point, is today goes into like GPUs, chips, right? And I think Mark Zuckerberg actually made a comment on this, right? Because all these giants, tech giants, are spending so much money buying up, H100s, right, from Nvidia's and whatnot, and they are probably overspending it. But they're willing to take that risk because the risk of missing out is actually higher, right, than this overspending. So I think that's the same for investors as well, right? And sometimes you would rather overpay for short term in order to get into the deals that have higher a chance of success and higher upside. So yeah, I hope, I wonder if there's any questions from the crowd. We have a couple of minutes. Yeah, just shout out.
Guys, a little bit. Hello again. Thanks for the great panel. So I want to ask, like, all of you actually, like, what do you think about like the intersection between like from all the projects that you have like seen, like the collaboration between like open source or like decentralized AI as well as like centralized AI, because it's like kind of similar to like DeFi, like the fastest or like the biggest sector is actually like stable coin, which is like the intersection between like TradFi and DeFi, right? So, and I hear like a lot of the talks already, but most of the talk is like focusing on like kind of like a, what is it, like open source or like decentralized AI maximalism. And so I just want your view on that.
Super interesting question.
Yeah, I would say they kind of the closed sourced AI might eventually need to come to some of the benefits, like edge computing will be something where OpenAI won't be able to serve all the inference, and so they'll naturally need to push it further to the edge, to the user's devices, to these clusters that are closer, and they'll find the performance benefits there. So I think, again, they'll naturally have to come to this because they might not have another option.
Yeah, I guess looking then at the data side of everything, hitting this data wall, there is no way for a lot of these companies to unlock and get private access to, or yeah, just as access to data. So you see companies like, I think I mentioned previously, Grass and Vana, who are one using, kind of web scraping to create data sets, but these data sets are then public and open, and Vana as well is user-owned data, where the user actually has like basically attribution to the fact that they've provided this data, and they could then earn rewards based on providing this data. But then this collective data set is able to be sold to companies that are traditional Web 2 AI that just need more access to data. And this data is very high quality. So I think there are a lot of companies that are building at this intersection to just solve problems with the technology that blockchains bring that wouldn't be able to be solved without it.
I'm not sure I like fully grokked your question. Do you mind like restating it?
Oh yeah, so I want to get your opinion on like the intersection between like decentralized AI and centralized AI.
Oh.
Kind of like stable coins and
maybe I can
Bitcoin.
add on a little bit more. So a good example he gave is the stable coin, because that's the bridge between DeFi and CeFi. So is there an example like that in crypto AI intersection?
I mean, I think there's a few things like that. That's a really good question. Thank you for that question. Like on the inference side, if the future is, that a bunch of startups are being built on, whatever it is that they do, like agents or assistants, right? But they're built on inference, right? And so the inference game is really a game of lowering costs and increasing speed. And so if decentralized approaches to that can deliver that, maybe that's a good way that like Web 2 users will prefer, those approaches. There's, however, people who make the case that it's really about verifiability rather than cost, right? So, like, imagine you have a agent that's actually managing, I don't know, your investments or something, and you have money at stake, and it's backed by an open AI API, which is very like not transparent. You know, reportedly the quality of such APIs goes in and out, and they could make a mistake or something. And so some people make the argument like with strict verifiability of agents, you know, like exactly which model, you know, is giving you the results, and like maybe you trust that model, and you know everything is above board. And I would say like the other side is training, because again, to me, the democratization is about letting people, for example, researchers try ideas that are competitive with these like big companies without having to work at a big company, right? So if you know, if we build really effective decentralized training networks where, for example, I could come in and I could crowdfund like $60 million to build an equivalent or competitive model with GPT-4 for some purpose, then I do think that is, again, very compelling to even a traditional researcher. But one of the problems is like we haven't demonstrated the effectiveness of those strategies, and to the other side, I think there's still a lot of bias because they experience kind of crypto solutions as speculative, which they are, right? So our job is to change that status quo.
Yeah.
Add one more. As we get into a more agentic future, your one LLM might call another LLM, so the verifiability to make sure you're getting the right response, because you might not be actually directly prompting the model. Your agent might prompt another model. And so that verifiability will get more and more important, and hopefully we think crypto can solve that.
Thank you. I think my view is I actually don't know, because a simple logic would be fiat world. In your example of stablecoin, right? Fiat world is already multi-trillion dollars, right? And whereas when we grow digital assets, it's a new world, new paradigm. So you need something to kind of bridge that gap. Whereas right now, Web2, both Web2 AI and Web3 AI are new and are developing, right? So what will be that intersection to bridge these two? I think in my mind, I don't have a mental model yet. Yeah, but with that said, thank you so much for the questions, and thank you so much for the sharings by the panelists.
Thank you.
Yeah.
Thank you a lot.
Thank you.
Thank you.